It's May 6, 2010, and chaos comes to the market. Over the course of a few minutes, a bad day in the market turns into a historic collapse, only to recover just as quickly as it fell. No one is sure what they just witnessed, but it is clear that systems broke.
The market didn't work. It broke down. The machines broke down. That's what happened.
One of the most startling revelations is that amidst the chaos, the New York Stock Exchange's quotation system fell behind. Depending on where tickers fell in the alphabet, information being provided was between 5 and 24 seconds old, an eternity in an era where high-frequency trading measures data by the millisecond. 6 months prior, November 6, 2009, the New York Yankees are celebrating their most recent World Series championship. They ride on floats toward City Hall in an event labeled a ticker tape parade. But the photos look like this. Ticker tape parade is like basketball. It's a holdover from a process that's since evolved past its namesake. People use computers now. This is a ticker tape parade. And while the spectacle itself may be a casualty to Wall Street's relentless drive towards instantaneous information, the impact of the stock ticker is intractable from today's modern financial system. It's a rainy day in the 1860s, and Edward A. Callahan is in the lobby of a building in Brooklyn, New York. Suddenly, a mass of young men appear, racing through the area and shuffling him out into the street. He gets wet. The men are couriers for various brokerages delivering news of stock prices from the trading floor, and in an era where the telegraph has already existed for many years, Callahan decides that there isn't really much good reason for these people to exist. He would have rather been dry. Several years later, he begins selling the world's first stock ticker. The device can print stock prices on a ribbon of paper nearly as they happen at the exchange. Even William Heath, known as the American Deer for being the swiftest of all the couriers on Wall Street, is no match for the new technology. After his firm installs their ticker, the men gathered around the machine laugh at his frantic arrival, having long since received the information he intended to provide. The early machine wasn't perfect, of course, and one man who seeks to improve it is Thomas Edison, who has a knack for inventing things, but has not yet experienced much commercial success. This all changes with his new universal stock ticker. New York streets soon find themselves beneath a canopy of wires. The device sells thousands of units, providing Edison with the first major source of capital and fame. It's enough to allow him to open his lab in Menlo Park, where he eventually invents the light bulb, among hundreds of other things. The stock ticker was to Edison as PayPal was to Elon Musk, if you will, even insofar as it led both men on inevitable paths towards Tesla, but I digress. The stock ticker dramatically changed the world of finance. Brokerages became social areas where business people congregate to get the latest information on share prices for businesses they own or are hoping to own. A clerk reads off the companies and prices so that people don't have to crowd, and the most liquid businesses are given single-letter tickers to save input time and preserve space on the tape. This is why, to a certain extent, there's still some prestige in single-letter tickers today. There are reports of bucket shops, which are basically places where people gamble on the price of stocks instead of purchasing actual shares, installing fake tickers to keep their clients. And some high-end restaurants in New York City have tickers in the dining room so that investors won't miss a move on their lunch break. Ticker service is offered at a monthly rate of about $10 per month, which feels an awful lot like an early SaaS business model. This pricing also feels like a steal. There was one account I came across saying that when quotes were still being delivered by couriers, a speculator might pay $100 a week fee for one of the brokerages not to be part of their office, but to be allowed to sit outside and listen to the reporting of prices through the keyhole of the door to their office. Wild. Dow Jones is one organization that uses this new flow of financial data to have a lasting impact on markets. As people become more familiar with the day-to-day movements of stocks and their prices, Dow begins publishing the average closing prices of stocks that they feel are representative of the market. An investor who missed a day could now get a good sense of how things had moved just by glancing at these figures, even if it didn't include their particular investment. This is the beginning of the concept of indices. Another concept that comes into existence due to the ticker is the idea of charting. Previously, it was possible to chart based on each day's closing price, but the ticker allows for charts instead to contain intraday information. A tape reader is someone whose job it is to stand at a ticker and note each instance of a particular quote so that a chart can be produced for later analysis. Language still used today about head and shoulders or a double bottom was developed during this era. One final thing the ticker did for the market was increase the role of sentiment. Because someone could spend all day monitoring the price, they might have an emotional attachment to a company, rooting for it to go up like rooting for a sports team to score. You can see this through diary entries of New Yorkers at the time experiencing elation or regret over moves that they made with their money. And so, the ticker had taken America by storm, but at the same time, the new popularity it brought to financial markets ensured its demise. The days of the ticker were always numbered. During the October 1929 stock market crash, the ticker, despite experiencing continued innovation in the past 50 years, ran up to 152 minutes late. Panicked traders were making moves on information that was hours old. As soon as possible, exchanges began transitioning to computer technology, with the last tickers being replaced in the 1960s. Of course, the ticker has also never left us. It's on the bottom of the screen and at the top of your browser. You talk in symbols and debate the uptick rule. You look at technical analysis. You cite indices. You love a stock far too much. Thanks for watching, guys.
Oh, the market's not so good today. Your stocks look kinda sick. In fact, they all drop down a point each time the tickers tick. We'll have to have more margin now, there isn't any doubt. So you better dash with a load of